Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today's video is a subscriber request video, one of the stock analysis on Edison International, EIX. Earlier in around January of this year or so, the stock had a massive drop because it had potentially ties to the California wildfire, South California. It was, as you see here, $80, and it got as low as $50. So that's a huge drop. And we're going to cover the stock and see if this is a good buying opportunity now. First, I want to show you a little bit about the company. Leading transformation of the electric power industry. You can see some facts at a glance. The company started at 1886. In 2023, core earnings at $1.8 billion, operating revenue at $16.3 billion, around 14,000 employees, and over here, diverse supplier spend $2.26 billion and $20 million in giving back. The companies you can see here is Southern California Edison. So this is the reason why they were the stock dropped tremendously, because of wildfire in Southern California. Thoughts of it was their fault. And Thero, another affiliate company of Edison. So we're gonna look at some fundamental first. So first off, it would move the price. You can see here. The stock is semi-cyclical. It has its ups and downs in earnings every year. Basically, you have 7% down here, up 22%, down 3%, up 20%, down 11%, down 3%, and so on and so on. Analysts are expecting actually a nice jump in 2025, around 22% increase in earnings, and then falling off at 2026 and 27 at 3% and 5% respectively. So you can see here overall the company does grow its earning over the past 19 years. Earnings has grown only 2.8%. It is again a utility company, and they grow earnings around 2 to 3% year in and year out. But what makes this stock attractive is the undervaluation and the current dividend yield of 5.66. You can see here, $58.50. This company should trade at around a normal multiple of 11.3. And if we revert back to that multiple in the next few years, you can see here you can have a total annual rate of return of 20% annually for the next few years. And while you're waiting for that price increase, you're collecting a 5.66 dividend yield and current earnings yield of 8.8. So that looks really, really good. And they actually increased the dividend even with the the wildfire and stuff like that. You can see here the dividend history. In 2024 they were paying 78 cents. Then they actually they paused the dividend because of the wildfire to see what was going on and stuff. But they initiated on you can see here on January, and they increased it to 82.75 per share. So that looks great. So the management is confident, they're not at fault and there's no issue with them, or if there is, the company has the balance sheet to cover it. So there's no concern here by management to basically pay out a higher dividend than when the wildfire started. So that looks good. If we look at operating cash flow, can they cover the dividend? We can see here very well they can cover the dividend. This is kind of the reason why they're increased it. It's like, oh, we have plenty of money to, if we're liable for anything, we have plenty of money to pay that and pay the dividend. So increase the dividend to show shareholders confidence in the company, and it looks good. Forecasting, if we go to estimates here, you see here 4 analysts are expecting growth here around 5% for the next few years. So it's very undervalued. Well, this is operating cash flow. Let me just try here. Okay, 8.7% in earnings. 16 analysts. So you can see here, if we to revert back to a 15 multiple, you can have a 30% annual rate of return. So that looks good, real good. 6 months ago, you can see here how earnings increase from 561 to 601. So that looks good. Overall, this looks good. If we go to CFRA, it gives it a hold rating with a price target of 60, so it's kind of right in that area. 3-year projected earnings growth of 5%, kind of coincide with fast graph. And fair value is at 51.87, so it's slightly above fair value at the current price, but it's right there, so more or less fair valued. But fast graph has it undervalued. Morningstar has it undervalued with a 4-star rating with a price tag of $80. It's kind of, if we go to fast graph, $80 is kind of where the normal multiple of 13.6 is at $82. So it's kind of right in that area. So it should be worth $80, this company, and it's right now at $58 with a nice 5.6 dividend yield. I'm actually interested in purchasing a share. If not, possibly sell option if it's available in the stock. So that looks good. If we go to technical, it also looks good here on the monthly chart. You can see here this is strong support around this $50 area. Strong support. During COVID it got low as 43.63, but that was a spike down, and then it bounced right back up. But this $50 area is really strong support right here in this area. This is all support. You got support here, support here, support here, support. This whole area, and you can see how it's bouncing. And we got this moving average, the monthly 200 moving average and 233 moving average. Bounce here, bounce here, bounce here, bounce here. We had a big crash, but it's actually over now. In 11 days, it is close above the monthly moving average. That looks real good. However, we look. The thing I don't like is the weekly moving average, the 13. You can see how it affected here at $60. It dropped a little bit. So we could see a little pullback here around to $55, and then from there, a bounce back up to $60 before it has any issues, and then climb back up to $70, have any issues, and back to all-time highs. So that's very possible because fundamentally it looks good. It could get to $80, and then just from there, just cruise on and follow earnings, and maybe a spike up a few times, with multiple of 18 or 19. You can see how it's done that here. And if it were to do that in, say, 2026 at 18 multiple, it could get to $90 to $100. So that's all possible. So it looks good. I like it. BBB credit rating. Long-term debt to cap is high at 64.8%. But overall, that looks good. Another thing, if we go to CFRA, Seeking Alpha, you can see here PE of 9.8. If we go to dividend and see how the dividend yield is versus the history, you can see here almost 6%. So over the past 5 years, even during the COVID lows, it didn't get that high. It got up to 5.28, and we're getting almost higher than that, almost 6% dividend yield. So that looks great. So overall, the company looks good. I'm actually interested in purchasing shares, or if not, I'll maybe sell options around $55 or $50 and see if I could get it a little cheaper. If not, I just collect the premium on that. But let's see if financial fitness, let it load for a second here. So the share buyback has been fairly flat. I like to see companies buying back shares. Sales revenues has been growing. You can see here from 2023, 16.3 billion to 17.6 billion. So revenue grew. Margin, net margin also 7.8, 7.8 in 2023. So it's been increasing. You can see here 2020, 2021, 2022 was at the 5 and 4s. So it's almost double net margin. So that all looks good. Free cash flow, the dividend, was operating cash flow, because free cash flow for utility is non-existent. But operating cash flow, that looks good. It's been growing at 2%. If we shorten this here, maybe around during COVID, you can see here it's increased from 883 in 2023, 1292. So it's been an uptrend. So all that looks good. Analyst scorecard, very accurate, the analyst. So all looks good. The CFRA has it fairly valued. Morningstar has it undervalued. FastGraph has it undervalued. And the chart looks good on the monthly. Real good on the monthly. We go to the 3-month. You can see here it is under the month 3-month 50 moving average. So that's going to be some fight there around the $62, $63. But still, it's undervalued. You get a healthy dividend yield, a growing dividend yield, and on the valuations, and you have time to wait for it to catch up to earnings and get to around $80, $90. So overall, it looks good. The stock, I think, is a good buy at this price point. I actually may buy some shares or just sell options on it. But thank you for watching. If you have a stock you would like me to analyze, make sure to hit the comment and let me know what stock. And thank you for watching. If you're new to the channel, make sure to hit the subscribe button and the like button as well. So I'll see you guys in the next one.